We had a pretty massive gap down this morning, which is kind of expected given that we had some pretty poor housing numbers. We did actually touch the 105 target, which the low today was 104.97. So I am actually flat. I'm out of the spider put spread, and I'm going to wait to see if there's further weakness. I might get back short again. If it bounces off this level, I'll probably end up getting long for a very short-term trade. I'm not bullish on this market at all, but I do play the swings. Remember, we've got the possibility for an inverse head and shoulders here. We're at, if you're bullish on the market at all, this is where you need to get long. Right down here. And hopefully, even if you get a little bit more of a gap down in the morning yet, that's basically the best opportunity that you're going to have in a long time if you are bullish on this market. I would, given this pattern, it hasn't been confirmed yet, but as far as risk to reward goes, if you get long here and you risk 3 spider points or 30 SP points to the lows, because you have to put a stop below the lows of the S&P. Risk to reward, that's not that bad for a potential measured move up to 123, and that's if you're bullish. Now, I personally think that the market's pretty weak right now. I'm gonna probably play the short-term bounce, which will probably happen the rest of the week. Maybe a little bounce before we go any lower. Ideally, I would prefer if it gapped down in the morning to buy it, obviously for a lower price, but we'll have to see what happens when tomorrow opens up. Now, just going to a 15-minute chart quick. Basically, we gapped down and just went sideways all day. Made a little channel here, and then closed basically at the low end of the range here. We did actually come down to the 105 level and tested early in the morning, but the bulk of the price action was in this trading range, and we ended up closing at the low of that trading range. And so I do think that there's probably going to be a little continuation move to the downside early in the morning tomorrow, whether it be a gap down or an actual trade lower once it opens. But I think we're nearing the end of this short-term swing. It's a little overextended to the downside right now, and a little pop. It would be healthy for us bears to have a little pop and get some better prices to re-short this thing if we're for those of us that are bearish. Longer term, remember, we've got the possibility for a standard head and shoulders here. We're basically at the neckline right now. Testing this level. If you ignore the little blurb below the neckline here, the neckline is at the 105 level. So 1050 on the SP 500 and 105 on the spiders. I'm just going to basically whiz through these other indicators that I normally use. The volatility index, we broke this level of resistance, so now this should hold as support for a move higher on the VIX, which is bearish on the market. With that being said, it was a gap higher. It might fill the gap, it might not, but I think that this level here is the key level. We need to stay above that if we're bearish and go higher. If we're bullish, then obviously you're going to want to break this level to at least fill the gap, maybe even go lower. I don't necessarily expect that's what's going to happen. I do think we're going to end up coming up to this 36 level, 36, 37 area when this is all said and done. And the 10-year Treasury yield gapped lower today. Remember I said, we're trading in this tight range, and usually it came down, held lower, which is a bearish sign because holding lower is showing relative weakness. And this is the yields. So as yields go lower, equities usually go lower. And I pointed out that we had a bearish engulfing here and a 50% retracement, which on a closing basis held below the 50% retracement. And I did mention 25 as that level of like short-term support, which is based off of basically this pivot back here. So we are at some support on the yields, and we could have a small bounce before we head lower on the yields, maybe to fill the gap. But I'm bearish on the yields too right now. We got the government coming in and buying stuff up. I think the yields are going to end up coming down to this 22 area before this is all said and done. The gold index had a pretty huge day today, especially on the GLD. This gold index actually looks pretty bearish. I'm going to switch to the GLD just to show you what I'm talking about, and I'm going to go to the 15-minute chart. We gapped down this morning, huge gap down. The actual gold was down quite a bit, and this GLD opened up way down here. After this first 15-minute candle closed, even if after the first 10-minute candle closed, you know that this is basically going to fill the gap because it's showing strength right off the open. It opened at its lows, pushed higher. Within 10 minutes, it was at the 50% retracement of the gap. And so you know the gap's going to get filled. This is the point where you can buy this and be confident that the gap's going to get filled and possibly even go higher. So if you bought this here as a day trade, you got paid huge today. And it has a nice buy set up in here. And on the daily chart, it's a bullish engulfing candle. So it's still very bullish on gold. I haven't seen anything to really tell me otherwise. I believe I said yesterday to buy on a dip. Well, this was definitely a buyable dip right into a support level. US dollar still moving higher. Today was kind of on the UUP at least, was kind of a weaker day actually. It gapped higher in the morning and then sold off hard right at the open, basically the opposite of gold. So gold is still basically trading like a commodity. If you can get the dollar to come down a little bit more, this is basically a sell setup. And so with the dollar coming lower, that's another reason why I think that equities are due for a little bounce. I don't think it's going to be that much of a bounce, but it's going to be something where you're either going to want to be long or out of it completely if you're a bear. Where could we go? It could come down to fill this gap easily. As far as, there's another gap here too we could fill. So these are a couple levels we could come down and test before we go higher on the UUP. And that's just looking at a 15-minute chart. If we go to a daily chart and zoom in, we've got plenty of room. If we come down and fill this gap and then go higher, it still fits the pattern of the overextension play where I think we're going to end up back in this channel eventually.